and gentlemen, welcome back to the channel. Tom Lee just dropped a bombshell explaining why the markets flip-flopped so aggressively. I've been in the markets for 8-ish years, quite a while, and what we've seen today is unprecedented. To have the NASDAQ up 2.3% and then to proceed to sell off almost 2.5% negative is a crazy move. Outside of COVID, or maybe late 2018, there was a day or two. I've only seen this twice. It happened after a Fed meeting in 2023 as well. Maybe it was 2024, but it's rare. Now, typically when these events happen, you're at the end of a corrective cycle. There was clear signs of capitulation today, and we'll talk about that a little bit in today's episode. But the root cause of why markets sold off today, I think a lot of people are not really understanding. And Tom Lee puts it into perspective. We talked about this in the video earlier today. What I've heard a lot of people talking about is the yen carry trade debacle again. Now, if you have not been in the markets for a long time, the yen carry trade from time to time has been an area of concern. It really came to light more so in 2023 and even late 2022, where the Japanese yen, makes some weird moves. The Japanese central bank begins to raise rates. The yen, it typically begins to weaken, and it weakens so much where companies basically borrow in yen, convert to US dollars, and make investments. Basically a way to get cheap money. Well, when the Japanese central bank begins to raise rates, it becomes a problem. That is not what caused this market to freak out today. So I've seen a lot of retail investors talk about the yen carry trade, and just to spoil that here, you typically don't go through the same crisis twice, right? We already had the yen carry trade crisis. You don't typically get two of those. Not this quick, okay? That's not what happened. It's crypto. Crypto is what is happening. I said in the video earlier today, some weird crap is going on in crypto. I said, I guess that's what happens when everyone puts their reserves in Bitcoin, and then Bitcoin begins to, go through this cascading effect. It's algorithmically trained or programmed, if you will, to sell at certain levels, right? Companies want to protect themselves. These programs, these risk management programs, are programmed to dump assets when they hit a certain level. It's kind of like a margin call. Now, take a listen to what Tom Lee just said about this market, where we are in this crash, and what's happening with crypto that is bleeding into the equity market. Take a listen.
All right, joining us now is FundStrat's head of research, CNBC contributor Tom Lee, also the chairman of Bitmine Immersion Technologies, an Ether treasury company. All right, so Tom, you've heard what Steve had to say. This is, by the way, not unusual for NVIDIA, is it? NVIDIA, the good folks at Bespoke, your team, you've recognized that NVIDIA will often have these kind of wild swings following earnings, but what is your take right now on these markets?
Well, I think I'm going to kind of add to what Steve said. I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Yeah. Brian, it is. For instance, in 1987, portfolio insurance was the, quote, glitch. And that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found. And you said it, leverage is what's dangerous. And so investors should not be using excess leverage in crypto.
Tom Lee, very interconnected individual in crypto markets these days, in markets in general. He has the largest Ethereum treasury company, right? Bitmine Emergent Technologies. He said he knows he knows the companies and the people that are having the liquidity issues, but he doesn't want to name names. Okay? There is an issue in the crypto markets. Crypto markets and stock markets are interconnected. Okay? So you had this liquidity event today. Now, who knows when it gets better from a liquidity perspective? I would argue we're through the worst of it. But when you're dealing with liquidity events, you just never truly know when it's over until it's over. NASDAQ is down 8% from all-time highs. I would imagine we're pretty close, if not there already, sitting at around the 100-day moving average. Technically, you did get a close below that, but now you're back above that in overnight trading. You're up 0.32%. So a little bit of a weird spot that we're in markets. And with crypto, it's so like unregulated, so no man's land that, you know, you see it's still selling off. Like at the time of recording this video, Bitcoin is hitting its low literally right now. It's at $85,377. 4 minutes ago, it hit the lowest point you've seen in 6 months or however long it's been, right? Since April. Okay. There's a liquidity issue going on in crypto. That makes a lot more sense than the Japanese yen carry trade blowing up again. That makes no sense to me. You don't get the same crisis twice. Okay. There's smaller things happening in the markets, like the fact we're not getting a rate cut. Does that justify NASDAQ down 8%? No. Does a yen carry trade justify what happened today? No. Does a liquidity event in crypto potentially justify what's happening in markets right now? Maybe. Let's face it. We had NVIDIA earnings that confirm there's no AI bubble. You're about to hear from Dan Ives that says exactly that. We had Walmart earnings that shows the consumer is doing just fine. We had a jobs report today that beat expectations more than 2x, right? You've had all of these positive things happen, but markets reversed such a large decline or large upside, right? And it's because of this liquidity situation. It's actually funny. This was a real conversation I had with my mom tonight. I wrote on X, I said, I just explained to my mom why the markets crashed today. I said, quote, we were expecting 50,000 job ads and we got 119,000. She said, isn't that a good thing? I said, it should be. She said, so if we only got 10,000 job ads today, ... like she paused, like letting me finish. I said, oh yeah, markets would have ripped. She said, well, that makes no sense. I said, welcome to the stock market in 2025. And then there's a lot of people that are like, it's Japan, it's the yen carry trade. It's not that, okay? There's smaller things happening here and there, but as I said in the videos earlier today, there's something weird happening in crypto, and Tom Lee literally just exposed that there's a liquidity issue right now. There is he puts it, a bug in codes that are causing these margin calls to happen, okay? Inevitably, this gets solved, okay? Is Bitcoin going to 20,000 again? Probably not, right? It's very difficult to say where crypto's going in the next couple of days. But now that we know of this liquidity issue, it probably stops affecting the markets as much. Again, NASDAQ's down 8%. We'll see. The RSI's at 35. So you would hope that this would be over pretty soon. But again, like literally right now, crypto's just hitting a new low. So, yeah, liquidity events are not fun. Now, again, there was clear signs of capitulation today, right? You had the highest day of volume today you have seen since the April tariff crash, okay? And that's the last time you actually had something like material happen, right? A change, like a almost like black swan event, right? NASDAQ had 117.7 million shares traded hands. Highest single day of volume since, this is the third highest volume day of this year. The only other days of higher volume was April 7th. Markets actually only went up 0.25%. It was a pretty volatile day from the high and the low. I mean, you ended up moving from the high of the day on April 7th, roughly. Okay, that doesn't seem right. Maybe that's right. To the high of the day to the low of the day was a 9.2% move. That marked a short-term bottom, right? Next day, stocks generally worked higher, and then the next day was the 12% move on the NASDAQ. Kind of crazy. But so it was April 7th was the highest volume day of this year at 161 million for volume. The second highest volume day was April 9th. That was the 12% day when you had 142 million in volume. And the third highest day of volume this year was today at 117.7 million. The other fourth highest day was April 4th when the NASDAQ fell 6.2%. And you had 117 million in volume. Another close day was here, 108 million in volume. NASDAQ fell 4.25%. So this is a clear sign of capitulation today. Okay. Again, should be marking a bottom. If it doesn't, then you're looking at downside of that 200-day moving average. But I'm optimistic Bitcoin can start to, level out, find its footing here. This is where you had a lot of consolidation during the, March, April crash earlier this year. So let me know your thoughts on this down below in the comment section. I would love your feedback on this. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys want to come trade, invest alongside us, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.